Good day, folks, and welcome. Now, it's very hot here in Melbourne, Australia today, and so I really enjoy coming into this room where I can cool off and relax a little bit. Now, we all love to have a good income producing asset. Well, what about if we could buy into a company that not only gives us good income, but can also set us up for great growth potential going forward? Well, in this video, I'm going to highlight 5 companies that are already paying good income, but can really set us up for that great growth potential going forward. And I'll explain why this is likely to continue despite what we keep hearing about with interest rates rising or what may happen in the general economy. So let's do this. First of all, I'd like to set up a foundationary basis which highlights the value of what I'm about to share with you and sets the context of investing in these companies. So stick with me on this one, it'll be worth it. Now, it's important to understand that although money changes in its value or purchasing power, all the money that's brought into existence doesn't actually disappear. It simply moves or travels from one location to another location looking to find a higher return. Much like a balloon that's filled with air. If you constrain one end, the air will simply move to the unconstrained end. The same is true with investment money flows. Now, you may be genuinely concerned about global debt levels, and that if interest rates rise, this will reduce or constrain the liquidity that's in the system and the subsequent money that will find itself in these businesses that we're looking to invest in. So let's address that concern. Check out this global debt chart from the International Monetary Fund. You can see here we have corporate debt, household debt, and public debt, giving us total debt of 256% relative to our GDP. What does this mean? Well, essentially means that our debt on an annual basis is far greater than what our underlying economy can actually pay for. As a result, interest rates have come down, and more money keeps getting pumped into the system to facilitate the debt obligations associated with this. Real-term interest rates on cash or bond yields are either negative or near zero, losing their attractiveness for people to want to hold them. The Reserve Bank can raise interest rates, but if they do this in any meaningful way, then the economy will crash. Have a look at this chart, which looks at the rate at which money is turning over in the US economy, otherwise known as the velocity of money. You can see it's the lowest it's been in over 20 years, and I bet it's not too different in many other developed countries of the world too. If the Reserve Bank in the US raise interest rates in any meaningful way, this will very quickly crash the economy, and the bankers know it. If they increase it in a superficial way, which I think is more likely, then they can keep things going for a little bit longer. Both paths end up at the same place, but at least by raising it in a superficial way to combat the inflationary problem they're seeing, things can last a little bit longer. They've truly placed themselves between a rock and a hard place. Their business of inflating the money supply is coming to an end, but until it does, people will continue to find a better place to park their hard-earned funds. If you had a choice, just think about it for a second. Would you hold currency that you know is guaranteed to lose value year on year? Or would you prefer to put it at a location where you can get a decent rate of return and maintain a level of purchasing power because you hold an asset that has fundamental value? Wealthy individuals and hedge funds have been placing their money in hard assets like property. Have you looked around your local neighbourhood recently and seen how many foreign investors have become your neighbours? This has been a global trend in all the major developed capital cities around the world. Understanding the deteriorating nature of regular fiat currencies, this article shows how determined hedge funds have been to securing properties for their wealthy clients. Money has also found its way into commodities, as demonstrated by this article here. The commodity supercycle continues. 1 year into the latest supercycle, Eric Fry explains why this one could be a monster, how to play it in your portfolio. And it is this area, the area of commodities, that I'd like to focus our attention on. So how could we define a commodity supercycle? Well, it's a long-term trend in the price of commodities. Interesting to note that the price of commodities is well known to be volatile, with dramatic upswings and downswings. Overproduction, war, shortages, and other factors all affect the supply and demand of these commodities. However, aside from these types of short-term events, a larger pattern appears in the price of movements of commodities. There are multi-decade periods of price ascent and decline. And just think about it too for a moment, that paper money historically comes and goes, but commodities always have a real-world use case. Ask yourself, can the economy really be booming without houses being built and the auto industry producing vehicles? If your answer is no, then copper is certainly one of those important metals that help drive the economy. What about fuel to run the auto industry, commercial aeroplanes, and the shipping industry? This is also an important component. Without fuel, everything grinds to a halt. Now, just before you start thinking we won't need too much oil production going forward because we have electric vehicles displacing internal combustion engines, then have a look at this chart from Bloomberg. It's looking at new car sales in the UK going forward. You can see here that we are at least 10 years away before we start seeing more new electric vehicles there when compared to traditional vehicles. But then how quickly can electrification displace the powering of commercial aeroplanes, ships, and the trucking industry, which consume vast amounts of oil? I'd imagine it will take significantly more time for this to take place. So in my view, oil and the demand for it will still be around for some time to come. Throughout the history of currency hyperinflationary busts, precious metals have always come out as winners. Although cyclical in price, the long-term trend is firmly established. It takes a certain amount of time, energy, and processing power to bring a precious metal to pure form. It will therefore always cost more in any debased fiat currency to purchase these rarer metals. The last thing to note is that gold is typically a byproduct of a copper mine. So a company that mines for copper can get the added benefit of having gold production too. So what are our 5 companies that can give us good income as well as put us in line for great growth potential going forward? Our first company is a diversified mining company called BHP. You've probably heard of it. Here it is. It has a current PE ratio of 8.4. It has substantial interests in oil and gas, but also produces copper, potash, iron ore, coal, and nickel. Now, a PE ratio of 8.4 is really quite low when compared to companies like Tesla, which has a PE ratio of 344. Certainly very highly priced, and Google, which has a PE ratio of 27, which is also quite high. Now, the good thing I like about BHP is demonstrated here, that in the past 12 months, it's paid a dividend of about 4.5% based on its current share price. But it's expected in the next 12 months to give a dividend yield, as you can see there, very close to 9%. I think that's a very good return for simply holding the stock and not doing much else. Our second company is also a diversified mining company, Rio Tinto. Now, it has a current PE ratio of 5.9, also indicating good value. And it's into aluminium, copper, diamonds, energy minerals, and iron ore. Again, let's look at the income that it's been giving. We can see here it's given about 9% dividend yield, and it's expected to continue that in the next 12 months. Again, a very high return for simply holding a stock and not doing much else, with the potential for great growth going forward. Our third company is Newcrest Mining. It's into gold and copper, and it has a current PE ratio of 15. Now, let's have a look at what sort of income we can expect to get from this. In the last 12 months, it's given about 2.2% interest rate based on the current share price, and we can expect to get about 3% over the next 12 months based on its share price. Now, 3% may be relatively low compared to the other two that we've just looked at, but that is still pretty good when you compare to what you can get with cash or with bond yields. And the other thing to consider, which puts this stock in great favour with me, is that the capital growth appreciation could be quite explosive. So it's a bit of a trade-off there. but another good stock which I actually hold. Our fourth company is Newmont Corporation, the world's largest gold producer. It has a current PE ratio of 25. And then let's have a look at the income we can expect to get from this. You can see it's already paid 3.5% in the last 12 months, and it's expected to do roughly the same going forward. Another great company to own. Our fifth and final company is Southern Copper Corporation. It mainly mines for copper, but also does other minerals like zinc and silver. It has a current PE ratio of 15, and the sort of yield that we can expect to get from it. It has given 3.9% last 12 months, but is expected to up that to 5.7% going forward. Now, when we look at all 5 companies that we've looked at today, and we did an average yield for the entire 5, if we were to purchase them as a group, then that would come to 6% yield, which I think is pretty good, with the potential to get awesome capital gain appreciations with it. Eventually, the global debt bubble is likely to burst, at which point in time interest rates could rise sharply, and then an orchestrated freezing of the entire global financial system takes place, with some kind of global financial reset at the end of all that. As an absolute minimum that we can do to secure our financial future is to own precious metals like gold and silver and some select cryptocurrencies, and being sure to include some of the ISO 222 compliant ones. Outside of that, we could actually enjoy the ownership of these companies that we spoke about, enjoy the income that they give and the potential they give us for great capital appreciation going forward as we continually watch fiat currencies wither.